As long as there's one left, it doesn't have to be one Satoshi, 1/100 millionth of a Bitcoin. As long as that isn't under the control of the evil BlackRock, the whole value of the network goes up, no matter how many you cancel. Max Kaiser says, "Oh, they're gonna seize it all." Okay, let's go down that path. Let's say they tried that. If they were to seize all of the accounts at Merrill Lynch and Bank of America and UBS and everywhere else that bought this, security, it'd be a violation of U.S. law. So there'd be some ramifications.
BlackRock, the world's largest asset management firm, has significantly increased its Bitcoin holdings to 242,829 BTC. Robert Mitchnick, BlackRock's head of digital assets, affirmed Bitcoin as a top priority for clients. With flows surpassing $13.5 billion within just 11 weeks, the IBIT has garnered unprecedented attention, indicating a seismic shift in institutional interest toward Bitcoin. That said, with Bitcoin's growing popularity through the Bitcoin ETFs, more and more investors have become concerned about the security of their Bitcoin investments, particularly regarding potential risks of institutional manipulation, regulatory uncertainty, and the potential for government intervention or seizure of assets. Mark Yusko, CEO of Morgan Creek Capital, has recently given his comments regarding these issues in his latest interview with Sean Clark. He also discusses Bitcoin's disruptive and revolutionary potential and provides his latest price predictions for this cycle following the halving. Let us now view clips from the interview. As we do, please take a moment to give us a like, subscribe to the channel, and turn on post notifications for more similar videos. Make sure to stay through the end of the video to hear why Yusko believes Bitcoin could reach $160,000 this cycle. Thanks and enjoy.
Fundamentally, blockchain technology and Bitcoin in specific as the first use case of blockchain technology fundamentally disrupts financial services. The same way the internet disrupted media and commerce, the way the printing press disrupted the church way back when. So the question on the ETFs, BlackRock, 5 years ago, Larry Fink, it's an index of money laundering. It's for bad people, terrorists, and you crazy. Yeah. No, we hate it. June of last year, Larry's like, I'm in, and applied for an ETF. I'm like, it's over. It was definitely going to be approved. I started talking about it. And look, I was wrong. I thought he would be the only one to be approved. I thought they'd pull a really fast one and say, look, Larry's part of us. He's part of the group. And so we want him to be the king. And we want all the others that are upstarts, like 21 shares, which we own a piece of, and Bitwise, which we own a piece of. You guys can't play. Thankfully, I was wrong. And so they approved them all. And what it does is it goes from technology savvy people, young people, to myself and all my friends, right? The boomers. It's a boomer wrapper. The ETF is a boomer wrapper to get access to this fundamentally better savings technology. Max Kaiser says, "Oh, they're gonna seize it all." Okay, let's go down that path. Let's say they tried that. If they were to seize all of the accounts at Merrill Lynch and Bank of America and UBS and everywhere else that bought this, security, it'd be a violation of U.S. law. So there'd be some ramifications. And you can say, oh, eminent domain for national security. Okay, let's see how that flies and how many votes you lose. But here's the problem. What does that do for the rest of us? We're happy, right? It's like Satoshi Nakamoto said. What happens when coins are lost or stolen? Consider it a donation to the rest of the community. As long as there's one left, it doesn't have to be one Satoshi, 1/100 millionth of a Bitcoin. As long as that isn't under the control of the evil BlackRock, the whole value of the network goes up, no matter how many you cancel. So I actually don't think they're in the business of canceling. I think Larry's in the business of making money, charging fees. And at the end of the day, this technology, I believe, is a superior savings technology. Every empire eventually falls, and the way you protect yourself is by having a store of value, a hard asset. In the past, that was gold. In the future, I believe it will be Bitcoin. Why? Well, Bitcoin is structurally equally hard, meaning it's equally scarce. The amount of gold that's mined every year roughly equals the amount that's lost or stolen or kind of used up. So it's interestingly hard. Bitcoin, as of the last halving, became equally, the stock to flow ratio was roughly the same as gold. With this halving in 3 weeks, it will be more scarce than gold. So it'll be a better, harder currency.
Despite concerns over the security of Bitcoin investments and the potential for market manipulation by large financial institutions, Yusko believes in the transformative potential of Bitcoin and blockchain technology to redefine global financial systems as we know it. He sees the involvement of large institutions such as BlackRock to be positive for Bitcoin, as it greatly helps the cryptocurrency's journey towards global adoption. According to him, Bitcoin is immune to manipulation by any single entity and is poised for massive growth in this cycle. Let us now go back to the interview where Mark Yusko shares his latest predictions for Bitcoin following the halving.
My view on this cycle is fair value today, as you and I are speaking, is in the low 50s. That's a Metcalfe's Law model that Tim Peterson and others calculate. The halving does this amazing thing. So what the halving does is it changes the fair value. Well, why? Well, because if you think about it, the miners, their costs are fixed. Electricity cost, miner cost. And so when the halving occurs and the block rewards get cut in half, in theory, a whole bunch of miners have to go out of business unless the price rises. So what we've seen in every cycle up to this point is a doubling of the fair value to adjust for the decrease in block rewards. Makes sense. But that movement that's built in, hard-coded in the code from Satoshi himself, that code then attracts attention. And, it's not politically popular, but true. The vast majority of people who are traders happen to be male. Males have genetically, back to our long-distance ancestors, the hunter gene. If someone were to walk by my door out there, I would look. So my point is, once that price starts moving, all the traders, mostly male, pile in. And then the gamblers come in and the speculators and they lever up. And then we get to the overpriced level, usually 2.3 times the fair value. So let's say fair value this cycle, 50. We're going to double. But this time we're not going to double because now we have ordinals. Ordinals allow there to be transaction fees so the miners can get compensated not just from block rewards. So maybe the fair value only goes to 80K. Okay, let's just be conservative, 80. Double, that's 160. We shoot right through 160, but we're not going to go as high this time, I don't think, because there's not as much leverage as the last two cycles, because they clamp down on Binance and FTX. So let's say we only get to 160 this cycle. Okay, then fair value will continue to accrete. The next cycle, we hit gold equivalents. And gold equivalents, which is about 6 trillion. Everybody says 12. No. Half the gold in the world is jewelry and chalices, and that doesn't count. It's the monetary value of gold at central banks and in those big coins that matter. So that's about 6 trillion. 6 trillion, divided by, call it, 15 million coins, because there's been some lost or stolen, gives you about a 400K price. And then we blow through that a little bit, and that gets us to the 500K. So I just think that's pretty easy over the next 5-6 years. And then the question is, quo vadis? What do we do from there?
Meanwhile, as Bitcoin currently continues its upward trajectory, Laurent Benayoun, CEO of Acheron Trading and a renowned quantitative trading strategies expert, forecasts a potential surge of up to 150% in the current bull market cycle. Benayoun suggests that Bitcoin's price could soar to a staggering $180,000, citing various factors such as the emergence of the Bitcoin ETFs and the impending supply reduction from the upcoming Bitcoin halving. Benayoun's analysis delves into historical performance trends, indicating that with each cycle, the multiple on the all-time high becomes progressively lower. He predicts a substantial increase of 2x to 3x compared to previous cycles, culminating in a price range between $120,000 to $180,000 per Bitcoin. Benayoun also notes the possible influence of financial policies in the United States on Bitcoin's price trajectory. The anticipation of a reduction in interest rates, driven by stagnant rates in recent times, fuels investor expectations of a bullish trend for Bitcoin. Interestingly, Benayoun's projection aligns with several other prominent forecasts within the cryptocurrency space. Analysts at Bitfinex anticipate a conservative price objective of $100,000 to $120,000 by the end of 2024, with the cycle peak expected in 2025. Similarly, Bernstein, a leading wealth management firm, foresees Bitcoin breaking out to approximately $150,000 following the halving event by mid-2025. There are even more ambitious predictions, with some models suggesting a peak price of $337,000 in the bullish scenario. Notably, Willy Woo, a respected Bitcoin analyst, places Bitcoin's upper bound at $337,000, indicating that the current bull market is still in its early stages. In addition to these projections, there are even bolder forecasts, including a $1 million price target by 2030, proposed by Cathie Wood, CEO of ARK Invest. Wood's optimism stems from the anticipated surge in institutional involvement, which she believes will more than double the incremental price assumption for institutions. Do you agree with Mark Yusko's insights and the extremely bullish price predictions of him and other analysts? Why or why not? Feel free to drop your thoughts and analyses in the comments below. If you found today's video enlightening and want to stay ahead with more insights and updates on crypto and global finance, make sure to hit the like button, subscribe to our channel, and turn on post notifications. Your support greatly encourages us to continue providing in-depth content and discussions. Stay tuned for our next episode, where we'll uncover more about the fascinating developments in the cryptocurrency space. Until then, keep questioning, keep exploring, and most importantly, keep investing wisely. Thank you for watching, and we'll see you in the next video.